Today I'm going to talk about the best fixed deposit rates that I could find for the month of February 2023. And rates have come down slightly since I last spoke about them in January. But you can still get around 4% per annum interest for your funds when you subscribe to all these fixed deposits, which are a very low risk way to grow your savings. Now I'm giving you a bunch of options because Singapore Deposit Insurance Corporation, SDIC, insures up to $75,000 on a per bank basis. And therefore you're feeling a little bit more paranoid, especially because some of the banks on this list are not very well-known local banks. You can opt to split up your funds into $75,000 per bank so that you receive the maximum insurance coverage for your funds. Now, of course, this is for very risk-averse people, but since the coverage is free, you can opt to do this. Of course, there's a little bit more trouble when you have multiple accounts with different banks. But this is entirely up to you, so I'm giving you the option and the information. The first on my list is OCBC, which is giving 4.18% per annum interest if you're a premier client. Now, even if you're not a premier client, you can actually also get 4.08% per annum, but you need to be an OCBC 360 account holder. You need at least $20,000 to be eligible for these rates, and the rate is good for 8 months. For longer term fixed deposit at 12 months, OCBC is offering lower rates from 3.4% to 3.9% depending on whether you're a normal customer or one of their premier banking clients. OCBC is also offering a 3.88% per annum fixed deposit for CPF funds. And those who have been investing in T-bills might find this a better alternative because, first of all, the rates are known and upfront, rather than T-bills where you have to apply and wait for the bidding process. Also, the tenure is slightly longer at 8 months, so you can enjoy this 3.88% rate for 2 more months than a 6-month T-bill. Just like the other OCBC fixed deposit rates, this requires at least $20,000 for you to enjoy the 3.88% per annum rate. Do me a favor and drop a like on this video, it really helps me reach more people, and thanks for doing me this favor. Next, HSBC is offering 4% per annum interest for their 7-month fixed deposit, and this rate is unchanged since January. It is a good option for those who don't want to lock up their funds for an entire year, and 7 months you get 4% per annum interest. Now, HSBC also has a shorter tenure one. At 3 months, you get 3.85% interest, which is not too far off from 4%, and you need at least $30,000 to be eligible for these rates from HSBC. Next up, we have RHB, which is offering 4.1% per annum interest on their 12-month and 24-month fixed deposit, and you need at least $20,000 to apply for these rates. RHB rates are great for those who want to lock up their funds for a much longer period of time. For a 2-year fixed deposit, 4.1% per annum interest is actually the highest I can find. I don't think other banks are matching this rate. So if you're someone who want to lock up your funds for a longer period of time rather than 12 months, RHB's 24-month fixed deposit is the one to consider, and you can save the trouble of having to find other fixed deposit products or other options to invest your funds after the 12-month mark. RHB also has shorter tenure ones at 6 months coming in at 3.88% per annum interest, and a 3-month one coming at 3.38% per annum interest. Now, how does getting 100 USD sound if you're only putting in a few $100s? Today's video is brought to you by Weeboo, and they are giving you exactly that when you sign up for a Weeboo account. All you need to do is to sign up for Weeboo using the link below, put in 100 Sing dollars, and then buy 1 US stock and 1 option, and you can get 100 USD credited to your account, which you can withdraw as you like, or use it to buy more stocks and start your investment journey. And that's not all. You can sign up for another mutual fund for 5 days at least, and you can get up to 1,888 USD worth of Apple shares. Now, if you use my link, I think you'll be very, very lucky. So sign up here, find your account for the incredible sign up goodies. And thanks for supporting this channel and keeping me making more videos like this. Next up, we have Bank of China, which is offering 3.85% per annum interest if you have $5,000 to set aside. And it goes up to 3.90% per annum interest when you have $50,000. And the final rate of 3.95% per annum interest if you have $300,000 to place with the bank. Now, this rate is not as good as the other banks I mentioned, especially when you have to put $300,000 in it. But again, it is another option to consider if you are just finding different banks to split up a large amount of funds. All these rates are for 12-month deposits with Bank of China, and you can apply online for the rates. If you go through a bank, you tend to get lower rates as with most other banks on this list. If you want a longer tenure, Bank of China is offering 18 months fixed deposit for 3.7% per annum interest and a 2-year one for 3.6% per annum interest. And they also have a range of short-term fixed deposits from 1 month to 9 months, and the rates start at 2.9% for a 1 month fixed deposit. It goes up to 3.8% for a 3-month one and 3.85% per annum interest for the 6 and 9 months ones. So Bank of China is great because it offers a bunch of different tenures for you to choose from, and the rates are pretty decent for the different tenures. Maybank is offering a 12-month fixed deposit for 3.9% per annum interest, and if you want something longer, it offers 15 months for 3.8% per annum interest. And for both rates, you need $20,000 at least to be eligible for these rates. Also at 3.9% per annum interest will be ICBC's fixed deposit, and you only need 3 months for this, and the minimum amount is $500. Now for a 3-month fixed deposit, 3.9% per annum interest is the highest I could find. So it's suitable for those who just want to set aside funds for a very short period of time, and you have a very low capital outlay because $500 is the smallest amount compared to $10,000, $20,000, $30,000 other banks require. So this is something worth considering if you don't have that much funds, or you just want to set aside funds for only 3 months. Now, since you have watched to the end of the video, I'll give you one bonus option, which is actually where I'm putting some of my excess funds. And it is not a fixed deposit, but it is the Standard Chartered eSaver account. Now, the Standard Chartered eSaver account is actually a bank account, and you can withdraw funds any point of time, and you get a prorated interest. So this is better than fixed deposit. However, it is only for 2 months, and it is for fresh funds. So if you are a new Standard Chartered customer, there's no worries. You can just sign up for it, put your funds in, and you get 3.8% per annum interest for February and March. However, if you are someone who has existing funds with Standard Chartered, only incremental funds added on top of your balance based on January will receive this 3.8% per annum interest. I'm personally using this because I think I don't want to lock up my funds for too long, and a fixed deposit requires you to hold it for the tenure, otherwise you may not get the full interest. And I'm okay to sacrifice a little bit of interest. I think 3.8% is not the highest, but it's also not the lowest. And I get the flexibility of putting in more funds for 3.8% per annum interest, or withdrawing it if I need the liquidity. So a very, very good option. Check it out. Account opening is instant via SingPass MyInfo. And this is an option I'm personally using, so that may be something I'm interested in as well. I maintain a savings page where I compile interesting savings products into one page, and you can look at all these fixed deposits and sort them by their interest rates, by their tenure, or even by bank. And I think you'll find it very, very helpful. So go to the link shown on your screen right now if you want that. Also, remember to subscribe to my Telegram group for more content and great deals. And remember to drop me a like on this video. Thank you very much. And I'll see you in this video, which is last month's rates, and also this video, which YouTube thinks you'll really, really enjoy. And see you in those videos.